And good morning, options traders. What's happening, everybody? I was just speaking to one of the traders in our forum here about Sunrun, ticker RUN, and this person was asking about a particular formation that they had gone and done a purchase of some options or added to a position, and it turned out that it was in the wrong direction. And so they were asking, well, I thought that it looked like we were bouncing. What did I do wrong? Well, the whole conversation really led to the importance of a two-candle confirmation. And that's something that's very standard in technical analysis, regardless of what you're looking at. So I thought that might be helpful to pass on to the rest of the group. What is a two-candle confirmation and why is it important? So remember, in technical analysis, there's a lot of different key areas that we're looking at. We might be looking for support and resistance levels. And if those are broken, it might lead to potential reversal levels. We might be looking for breakouts and breakdowns. But in all of these cases and more, we would like to see what are called two-candle confirmations. And what that means is we're going to wait for two full candles. And when I say that, I'm talking about the body. I'm not worried about the shadows, but I'm looking for the body to be above or below these key marks. And what we're doing is just a little bit of a risk management tool. If we're expecting it to bounce maybe off of a 50-day moving average, I don't have to catch the bottom. I'm going to let the rest of the market tell me and lead the way to see if everybody else agrees with what I think. Remember, to succeed in the markets, it's not what you think that matters, it's what everybody else thinks. So that's another way of understanding why this two-candle confirmation rule is important. And what we're really doing is saying, okay, I will give up a little bit of profit in exchange for not getting faked. What you don't want to do is to jump in too early and find out it was really just a slight pause before a huge downtrend. So even a two-candle confirmation does not offer any guarantees, but it's definitely a little more assurance. So that's the importance of two-candle confirmations. So for example, over in the Thinkorswim platform, this is Sunrun, ticker RUN. So let's just do a few examples so you can see what I'm talking about with a two-candle confirmation. Let's start with this nice trend. Stock is moving up nicely, but we're getting stretched from this 50-day moving average. So one thing that I'm looking at is to remember that stocks typically tend to get pulled back towards this moving average. As they get stretched away, there's a tendency for them to fall back. You can also think of it like a rubber band being attached to the 50-day moving average and the candlestick. The further that candle starts to move away from the moving average, the tighter that rubber band gets and the more likely it is to snap back towards it. So as I'm seeing it get stretched, I'm starting to get on alert saying I'm looking for some signals that we're about to reverse. Well, we got this doji right here, and that's a very strong sign, and some traders will take the doji by itself. But a two-candle confirmation would be 1-2. This green one right here. We didn't go to the high side. Looks like we're starting to roll over. So this would be a pretty good sign that it's going to be a reversal or at least a pausing point. But then we got this piercing pattern right here. That would be a good signal. And then one of the ultimate signals in technical analysis is this kicker pattern right here. This for sure, this long-bodied red candle, this is a kicker pattern, a bear kicker pattern, would be your technical signal. So this would be our technical confirmation that we are now about to reverse. So now we're heading back down. What should our expectations be? Well, we're probably going to support off of the 50 or whichever moving average is next. So we come down here. We got close on this green one. Not quite a support, but what happened on the next one? See this great big long-bodied red candle, and we closed below it. Now, a lot of times I don't consider a candle that is straddling a moving average. I would usually give the benefit of the doubt to the previous trend. But in this case, the bulk of that candle is below, and we closed below. So I would want to see what, let's say, the next candle does. This would be my confirming candle. If you wanted to be really conservative, take this one. We're not trying to fight our way back up. So this certainly would be a two-candle confirmation. What else? Once we've seen this is a technical fail of the 50, we would expect it to go to the next moving average in line, which is down here at the 100. Come down here. This lower shadow got here, but I wouldn't really consider this a solid support unless I got what? a 2-candle confirmation. In this case, another kicker. So this is, again, a strong candlestick pattern, especially off of a major moving average. That's a reversal pattern. But why might I not want to take this as a buy signal? And this is another important part of this video, that you have to look at a lot of different things in technical analysis, not just your candles, not just your moving averages, not just your flat lines. We need to look at several things for confirming signals. So one of the things I'm going to look at is here, we're so close to this moving average. And my expectation is that we're probably going to resist. So why would I want to buy right here when there's a red light a few pennies above? Let's see if we can get through here. Well, we didn't. Got hit with another bearish engulfing up here, off of a major moving average. So now our expectation is that we are going to fail the 50. Come back down. We didn't really bounce off of the 100, but remember, it doesn't matter. The market's going to tell us what it wants to do. This would be our expectation, but we started to curl around down here. So we're at least close enough to the 100. I would wait for at least a couple of candles, maybe this green one right here, to say this is probably going to be at least a better signal that we're not heading lower. But we could also say, we're so close to this moving average up here. Depends. If you're a short-term trader, you might want to take that. But for me, I would definitely want to at least see it get through the 50. Now, if the 50 was way up here, sure, you could take it. But this is just so close. So we come up through here. We have resistance off the 50, as we would expect. Should we expect it to reverse? I don't know. Let's wait for a 2-candle confirmation. But in this case, we got 1, 2 above it. So this would be a 2-candle confirmation that we have now broken the 50. This is a technical break of the 50. This is also a good example that it doesn't always work. We would be tempted to take our buy here, and really a short time later fell right back to the 100. But you can't kick yourself when it doesn't work. It's about staying disciplined with your trading rules. And you can't go back and say just because a good decision didn't work out doesn't necessarily mean it was a bad decision. All right, so always stick with your trading rules. So we came back here to this moving average. We're supporting off of here. Am I going to consider this a bounce? I don't know. Let the market tell me. A bounce would be 1, 2 candles up here. It didn't. What did we get? 1, 2 candles below. Now I'm more confident that we're going back to the 100. Come back to the 100. So you see what's happening. Now we get this big green candle with a close well above the 50. I would probably consider that a strong break of the 50. But if not, you could certainly wait for this one, see if it's above the 50, or even this one. Again, give up a little in exchange for letting the market tell you the trend. So now we got on this nice big trend, but also notice, big gap, second big gap. We come up here, what happens at this top? All-time high, and we got hit with a piercing pattern. This is a strong reversal pattern, but I'm not necessarily going to say it's a reversal until 1 or 2 candles later. So I would look at this and say, okay, off of a piercing pattern, I would certainly take this as a reversal. If not, take this one. But in both cases, we are at least letting the market lead the way. Now, once we see this, our expectation should be that the stock is going to move back to the 50. We should also be expecting what? This gap to fill and this gap to fill. I've talked about this in previous videos, that in the large majority of the time that these gaps will fill. So now here's where this trader's question came in. They saw that we got this reversal, and they saw 1, 2, 3, 4, 5, 6 red candles, and then they saw the 2 greens. And they said, I thought it was a bounce. Well, my point was a bounce off of what? Remember, a lot of these stock price patterns are just simulated random walks. I've done that before in previous videos with coin flips. They'll look just like a stock chart. So a lot of what you're looking at here is just noise. 2 green candles in the middle of what appears to be a strong downtrend is not a signal. So what am I looking at here? Stretched away from the 50, got a piercing pattern up here, plus we have 2 gaps to contend with. Those are carrying a lot more weight than 2 green candles. Now on this date, on the second green candle, we had just filled this second gap right here, but we hadn't filled this first one. So I'm looking at this. I'm expecting this to fill. I'm not going to take a buy right here. What happened? Down here, well, definitely this one we definitely filled. That was also a support off of the 50. To see if we support, wait for 1 or 2 candles. There's 1, 2 came back to it. I'm not going to consider these bounces. That's not a bounce. That's not a bounce. Here's 1, here's 2. I would take a buy off of this red one. If you're in doubt, wait for this third one, this green one. But what else could I look at? I could look at a channel. Now back on this date, on the second green candle, it wasn't a real strong channel. Didn't have 3 touches, but that's one thing that you could at least be looking at to say, it looks like it's just a channel that's forming. A 2 candle break outside of this channel would be 1, 2 here. Never got there. It was just 2 green candles in the middle of a downtrend. It's not a bounce off of anything. Notice down here, if we look at our 2 candle bounce off of the 50, here's 1, here's 2, this green one. If we looked for a break of the channel, which is another thing we should look at, here's 1 candle break, here's a second one, maybe take it off of this red one. So now that I have 2 things to look at, 50-day moving average and a channel, I might actually wait for this red one. And that would be a 2 candle confirmation. But the main point of this video is that when you're looking at these key technical areas, the support, resistance, technical breaks, things like that, wait for a second candle confirmation. And the reason for that is very simple. You don't want to be the first one to dip your toe in that water and find out it's loaded with piranhas. Let the market lead the way. Give up some, just a few pennies or a couple of bucks of that upside in exchange for seeing that the market is behind you. Remember, it's not a good idea to predict the market, but instead react. And that's probably the simplest way to understand why we look for a 2 candle confirmation. So if you follow that rule and look for your 2 candle confirmations, you're going to find a big difference in your results. So for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a brand new technical analysis course, all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.